Hello and welcome to Moneycontrol. I'm your host Nikki Minchandani, and today we have a special conversation lined up with the management of Tata Technologies. The stock had a remarkable debut with a premium of nearly 140%. To delve deeper into the success, we've been joined by the Managing Director and the CEO of the company, Warren Harris, for his valuable insights. Hello there. First, congratulations. I think it's a bumper listing.
Yeah, thank you, Nikki. Thanks for your interest in us, and it's been a remarkable morning. We're very humbled by the response from the markets.
Yeah, the company has got off to a rather encouraging start with the company's market capitalization exceeding now Tata Elxsi. That's another group company. You think with this good start, you'd also be able to outperform the revenue and the PAT performance as compared to the group company? What kind of numbers can we now look at?
Well, we're very pleased with the momentum that we've established as an organisation. We're working hard to sustain it. We don't provide revenue guidance, but we think that we're in a very good space. The ER&D market continues to grow in double-digit terms. The contribution from India continues to exceed the growth rates of the overall market. I think our full end-to-end proposition, our ability to be able to develop complete electric vehicles is resonating with the market, and we believe that that will provide a platform from which we can continue to grow and expand our business.
Sure, I think most of the analyst community and also people on the street were making parallels to one of your group company, Tata Elxsi, and the market capitalization, which now seems to be exceeding that group company. In terms of your revenue and the PAT CAGR for the last 3 years, Tata Elxsi seems to have an upper hand. You think you'd be able to outdo that number? What kind of projections can now we be looking at? Since you're a listed entity now, you can talk about the guidance, you can throw up projections out there.
Yeah, we don't provide guidance, but as I said before, I'm very bullish about the overall market, the contribution from India, and our position within it. You know, we're still the Indian engineering service provider that has demonstrated its ability to be able to develop a vehicle, and specifically an electric vehicle, from scratch. That allows us to compete not just here in India, but also with the European and the North American engineering service providers. And I think the demographic advantage that we have here in India, the competitive cost base that we've established through a balanced onshore-offshore proposition will continue to differentiate ourselves and will provide the type of opportunity that will sustain the momentum and the growth that we've established.
All right, Warren, I also want to understand Tata Technologies' maximum on-site share and also has a significant contribution of auto vertical to its revenue. The percent is significantly higher as compared to all the other players, except for that for KPIT. Do you intend to change that anytime soon, or you intend to further follow that strategy going ahead too?
Well, one of the things that, again, differentiates Tata Technologies is the fact that we have been entrusted and will continue to be entrusted to develop full vehicles. And when you're entrusted with the responsibility of a complete product, you've really been entrusted with the family jewels of a manufacturing company. What that requires is a great deal of customer intimacy. You have to manage multiple stakeholder groups within the customers that you serve. You have to have people in the styling studio. You have to have people that work with the supply chain teams. And you really have to understand in great detail the manufacturing facilities around which the products are going to be built. So our proposition is not an India-out proposition. It's a balanced onshore-offshore proposition. If you look at our ratios at the moment, it's about 50-50 in terms of revenue, onshore and offshore. We think we can expand that to about 65-35, and that will drive associated improvements in margins over the next couple of years. But we're certainly not going to get to the 80-20s or the 90-10 ratios that are typically associated with IT services companies and those companies in the ER&D space that are predominantly India out.
Sure. The company also, I'm sure as per the RHP that we've read, the company is exposed to continued growth in top clients, and any deterioration in the client's business may lead to slower growth. The top 5 clients, which includes JLR, Tata Motors, and now Windfast, contribute to around 57% of your overall revenue and 71% of your services revenue in the first half of the financial year. My first question to you is, what's your percent of revenue coming just from Windfast?
Well, if you look at our client concentration, 10 years ago, we delivered the majority of our services to Tata Motors and to JLR. Last year, the aggregate contribution from JLR and TML was less than 33%. We've done a lot of work at Windfast over the last couple of years, and that's exceeded in terms of percentage revenue contribution the 20% mark. We think that will drop over the next 12 months as we continue to grow other clients. And Windfast pivots towards a focus on building vehicles and building out the Windfast brand and generating demand in different parts of the market that they're looking to sell vehicles. But that relationship is strategic to us, and we expect it to continue to be strategic in the future.
Sure. Right now, if I've got that right, you said that the contribution coming in from Windfast to your company's revenue is 20%. Have I got that right?
Yeah, it's just over 20%.
Do you expect it to further come down by how much by the end of this year?
Well, I'm not going to speculate on the specific amount, but we certainly expect it to drop as Windfast pivots its focus from developing vehicles to building and selling vehicles.
Okay, the reason why I have been asking you this question is the company stocks have tumbled nearly 90% from their highs due to their unrealistic concerns, or let's just say unrealistic expectation that they have from EV sales, as some of the analysts may put out a note saying that the ambition seems to be a little more aggressive when it comes to Windfast. Do you think any of that impact would be felt on your top line growth as well?
We do not expect the change in revenue from Windfast to impact our growth expectations. If you look at the volatility in the EV space, many of the electric vehicle companies have seen significant fluctuations in market cap and share price as market sentiment has shifted and changed. We do not believe that reflects the fundamentals at Windfast. They're a very strong company. They're part of the Wind Group. They've developed 4 great vehicles that they're now starting to sell, not just in the Vietnamese market, but in the federal and the European markets. They're building a manufacturing facility in North Carolina. That increase in manufacturing capacity will require that they continue to invest in new vehicles, and we expect to be part of those plans.
Sure. I would have appreciated if you could let us know what is the percent of revenue growth, or let's just say contribution, that you expect to come in by Windfast by the end of the year. Right now the number is 20%, and you said that you aim to gradually reduce it. That's going to be in a span of just a year, or you think it's just going to be gradual as you expand to more clients? Right now you have JLR and Airbus as some of your clients. Tell us more about your clientele.
All that I'll say is that Windfast will continue to be a material part of our business mix. It's an important relationship. It's a partnership that we will continue to invest in.
All right. Apart from JLR, could you talk more about your clientele? Does that also include the likes of Tesla?
We work with a collection of traditional OEMs and progressive new energy vehicle companies, and we are bound by client confidentiality agreements, and so some of the clients that we work with, we're not in a position to be able to name. But rest assured, we are working with the most progressive companies in both the traditional space as well as the new energy vehicle companies.
So the mix is bending more towards the new energy vehicle company now?
Well, we believe that we've got a balanced mix between traditional OEMs and new energy vehicle companies. From the new energy vehicle companies, we get access to innovation and the type of disruptive thinking that is really making a fundamental change to the way in which the entire automotive industry operates. With the traditional OEMs, we obviously get volume and predictability. So we believe that what we've got right now is a healthy mix. We expect to continue to maintain that.
Sure. The last question, perhaps second last, that I have in mind for you is the financials, right? For the 6-month period ended September, profit surged nearly 36% to 350 odd crores, and the revenues have also increased by 34% to a number of 2,526 crore. If these numbers were to be analyzed, do you think a profitability of 700 crore and a number of roughly 5,000 crore on top line is doable? Would you want me to repeat that question?
Yeah, if you could repeat that, I'd appreciate it. I didn't quite hear that.
Sure. In terms of your financials, the first 6 months, profit surged 36% to a number of 351 crore, and the revenue top line has increased by 34% to a number of 2,526 crore. If these numbers were to be analyzed, can we expect a revenue figure of nearly 5,000 crore and profit figure of nearly 700 crore by the end of the financial year?
Got it. Again, we do not provide guidance. But what I will say is that we expect to continue to grow. We expect to continue to improve where we have the opportunity, margins. And so we're bullish about finishing the year strongly. And we're also bullish about the momentum that we expect to take into the next fiscal year.
So in that case, do you expect H2 growth to be faster than that of H1?
Again, I'm not going to speculate on the specifics, growth rates, or the quantum revenue or margin that we expect to end up at. We do not provide guidance, but we are bullish about our continued ability to be able to improve the business and build upon the growth rates that we've established.
All right. The last question that I have for you in that case is, of course, you're not going to be giving in any guidance like you've suggested, but just in terms of the direction, if possible, 18 to 20% is the margin profile thus far. In this financial year, do you expect to outperform that number? You think you'd be able to deliver better numbers?
We're working hard to continue to not only protect margins, but to build upon them and to drive incremental improvement. I think the type of quantum leap improvement that we've seen over the last 3 to 4 years is likely to taper off. But as we expand our offshore, as we continue to improve our span of control, as we improve our people pyramid, I think there will be opportunities to build out margins towards that North Star of somewhere between 20 and 21%.
All right, Mr. Harris, we're just going to leave it at that. And thank you so much for taking out the time to share those valuable insights with us.
Thank you. And again, thanks for your interest in Tata Technologies.
All right, pleasure is all ours. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Do stay tuned in for more.